Good morning, everyone. Welcome to official YouTube channel of Officer Saturday 24/7. How are you all? So let's start the session. But before starting the session, those who are new here, first of all, I will let you know that this is the Back to Basic series for your PPB Principles and Practices of Banking. So as we know, there are 55 units in the PPB. And we are going to discuss each and every unit in a single session. So every day we are discussing one unit. And as you can see, today we are going to talk about the second unit, that is AML KYC guidelines, right? Now, when I am talking about AML KYC guideline, anti-money laundering and know your customer, so why they are required and why a lot of norms we have to study here. So first of all, if we talk about money laundering, so to stop money laundering, a lot of rules, regulations and norms have been introduced. So what actually the money laundering is? To convert the black money into white money is known as money laundering. When the conversion of black money will be done in the white money, this process is known as your money laundering. Now, this is what we are going to cover in this particular session. Every day we will be discussing one particular unit of your PPB at 7 a.m. only on Officers are at 24/7, in which we will be covering the detailed concept of the topic, the basics of the topic, and then we will be practicing the questions. Okay, so before starting the session, this is your detail of the session that we are going to do today. We are going to discuss AML KYC guidelines, unit number 2 of your module A. So banker customer relationship we have done in the last class. Today we are going to cover the AML KYC guidelines. So let's start from here. So first of all, when we talk about AML KYC guidelines, why they have been introduced, so the first term that comes in our mind, that is money laundering and financing of terrorism risk. We want to control the money laundering, we want to control the financing of terrorism, and that's why a certain rules, regulations have been introduced by RBI. That is known as AML and KYC. So first of all, if I'm talking about KYC, it stands for Know Your Customer, and it is the process that have to be, and it is the process that have to be compiled by each and every bank, or we can say financial institutions, to know their customer. How to know their customer? By knowing a certain information about the customer, the address of the customer, the name of the customer, the detail of the customer, everything is required. So there are certain KYC documents which will be used to understand that what customer is there, what person is there who wants to become your member, who wants to become your customer, who wants to create a legal relationship with the bank. So to know the customer, we need the KYC process. Okay, so because the first relationship bank and customer creates, that's a creditor-debtor relationship in which customer will be a creditor and bank will be a debtor. It means when a customer comes to your doorsteps and asking for opening a bank account, that's the first contact between the banker and the customer that happens. That creates the primary relationship between the both. Okay, and at that situation, at that point, you have to take the KYC from the customer, so that you will know the whatever person you are making legal contact with, is this person is of creditworthiness, is this person is of ethical means or not. So you have to find out the person is have done any kind of default or fraud in the banking system or any other financial system. So to understand about the customer, you need a certain KYC documentation in which you have to group, you have to give proof of your identity. Then second, you have to give proof of your address. And the third will be your photograph. So these are the basic 3 documents that is required to complete the process of KYC. Okay. And once you have completed the KYC process, you can now able to create any kind of relationship with the customer, right? Now, if I'm talking about AML, anti-money laundering norms. So money laundering is what I have told you. Money laundering is simply conversion of black money into white money. When you have a black money and you are converting that black money into white money, this is known as your money laundering. So conversion of black money into white money is money laundering. Now, what is black money? Black money simply is a money which have been earned from an illegal activity. Black money is the money which do not have black money is the money of which government do not have a proper source of income, a legal source of income. So let's say, for example, if I am earning a certain amount of money and I am hiding that income from the government because I do not want to pay the taxes, that's a black money. I am taking certain kind of, let's say in the corruption, I have earned certain money. I am taking the certain, I am performing a certain illegal transaction, let's say drug trafficking or human trafficking, something like that I am doing. In that situation, whatever money I am earning, that's your black money. Because it's very obvious, I won't be able to show that income in my account, in my income tax returns, because I do not have a legal source of income. So whatever money a person is earning from an illegal source of income, that money is known as black money. And to convert that money into white money by providing it a legal source of income, that process is known as money laundering. And this is done within by using the 3 steps or the 3 stages, that is placement, layering, and the third one is integration. Placement, layering and integration are the 3 stages of money laundering by which we are converting our black money into white money. Clear? Now, whenever we talk about placement, what actually this stage is? Placement is a stage in which the person who have a illegal money, who have a black money, that person enters that illegal money into the legal financial system by depositing that money in certain bank accounts. Okay, and the person is not depositing the whole amount of money in a single account, he is depositing in the multiple accounts. So placement is the stage in which the illegal money enters the legal financial system and the money will be deposited in the bank accounts. That's the placement. So after placing the money in the bank account, can we say now it is a right money? No, we cannot, because still if the banker is asking from where you have earned this money, you do not have a legal source of income to tell them. So until you have a legal source of income to say that yes, this money I have earned from this legal source of income, till then your money will be a black money. So after doing placement, our money is still a black money. Now the second stage we are going, that is layering. In layering, what we are doing, we are creating a complex network of transaction. In the layering, what you are doing, you are withdrawing the money from the bank accounts and you are creating a complex network of transaction. Let's say whatever amount you have invested the amount in the different markets, or you have deposited the amount in the different accounts. So let's say I have the money and I withdraw the money from the bank account from where I entered the black money into the financial system. That money I am investing in share market, in commodity market, in derivative market, in gold market, in insurance market. I have deposited that money into 5 to 6 bank accounts, or I have transferred that money into multiple bank accounts from one to another to the next third, or third to fourth, or fourth to fifth market. That's what I am doing. I am sharing that money. I am creating a complex network of transactions so that it will not be easily identified from where this money have come. Either you can invest in the diversified sector, or you can transfer the money from a multiple accounts to the another multiple accounts, so that it will not be easily traceable. Okay, that's the creating of layering. Now the third one, we have an integration. After investing that money, after creating a complex network of transaction, still our money is a black money, because still we do not have a legal source of income to tell. So now in the third stage integration, we will be creating our personal assets. Let's say, for example, I purchased a bungalow, I started a business, whatever I have done, I have created my own personal asset. Now, if someone asks from where you have purchased this particular bungalow, how you were capable of purchasing this bungalow, now I can tell I have invested my money in the share market, I got the return of 10% and I purchased my bungalow. From where I have started my business, I invested my money in the mutual fund, and that mutual fund have given me 26% return, and that's how I have started my business. So whatever capital is in front of government, in front of public, I have a legal source of income to tell them about that particular property, because I have done that investment in the layering stage. So whatever complex network of transaction we are creating in the layering stage, that will help us to create our personal asset in the integration, and we will be having a legal source of income to tell. Okay, so this is how money laundering works. Now let's discuss a little bit theory of the same. So money laundering is simply a process whereby the origin of fund is generated from criminal activities, illegal activities. It can be drug trafficking, it can be gun smuggling, it can be corruption. Whatever money you are earning, that black money you are earning from the criminal activity only, okay, is concealed, and these funds are infused in the financial system, appearing as if these originated from a legitimate source, from a legal source. Okay, so what you are saying here, so the money you have earned from the criminal activities, that money will be infused in the financial system, okay, and this will originate, this will be shown in the market that this was originated as a legitimate money or the legal source. This conversion is only the money laundering. Clear? Now, often such funds are deployed in legal activities or in legitimate assets to make them legal money. So corruption, tax evasion, Ponzi scheme, other financial crimes, cyber crimes are closely connected with the money laundering. Okay, so if you are earning a certain money from the Ponzi scheme is a kind of a fraud scheme that take our money from the, it collects the pool of funds from the various investors, Then tax evasion, you want to not to pay the taxes, that's why you are hiding your income. Then the corruption you are doing, because of that whatever money you are getting, that's also a black money. Because of financial crimes, let's say you have done the cyber crime, that's also money laundering. So all these are the transaction creates money laundering for you. And now all these transactions actually creates black money for you, and then you have to do the money laundering to create a legitimate source of income for these activities. Okay, so fund from these crimes now form a substantial portion of money laundering funds. Okay, so financial crimes now constitute a significant part of criminal activity. So if you are doing a cyber crime or something, this is also now counted as a black money or a criminal activity. Okay, now the third component of TRIDE today is terrorist financing. After that, we also have a terrorist financing. So first, we have the criminal activities, we have financial crimes, then we have what? We have a terrorist financing as well. Now for the terrorism, the people are using financial system to share the fund with each other, to transfer the fund from one place to another, to collect the fund from the various investors who want to invest in this kind of activity. So that is known as terrorist financing. So we are having a criminal activities, we are having financial crimes and the terrorist financing. All these are the way by which you are earning the black money. And all these have to be converted into the white money by the money laundering. Okay. Now, with growth of several terrorist organizations, it can be a big one or a small one, terrorist financing has assumed a large proportion here. So terrorist financing has developed a linkage with money laundering, as for both purposes, similar modalities are used. Whether you are converting your black money into the white money or whether you are doing a terrorist financing, they both uses the same financial institutions to make that money look legal in the market so that they will not be caught. Now, the money laundering, terrorist financing and financial crimes are interconnected. They are all what? Interconnected. Okay, then another aspect is that the certain criminal laws have organized into organized crime groups and professional money launderers. Okay, so this is what we are talking about. The money laundering, the terrorist financing, the financial crimes, they all are interconnected, and now they all are counted as a criminal activities. And to whatever money you have earned from here or transferred for this purpose, you have to convert into the legal source until and unless you do not want to caught with this particular activity. And that's what people is doing. And all these activities, for performing all these activities, they are using the financial institution. They are using the financial institution. They are using banks here. Okay, they are using financial institution, they are using banks here, and that's why AML KYC guidelines have become very much important to RBI, so that these kinds of activities should be removed. That the bank should not perform, or the bank should not be involved in these kinds of activity. That's why the AML KYC guidelines have become very important. Now, AML KYC guidelines which we are having, that was created by RBI to control this kind of money laundering, or we can say terrorism financing or financial crimes in the banking system, to control them, to remove them from the financial system. That's what RBI is doing. But apart from that, at the international level, we have Financial Action Task Force. It also creates a certain norms, or it also gives a certain recommendation, so that people will not be performing these three activities. Okay, so Financial Action Task Force is a global organization. It was set up for what? Evolving the measures to be taken by financial sector businesses and certain non-financial businesses and professions for prevention of the money laundering at the global level. So it gives you a certain recommendation, it gives you a certain measures that you have to follow to control these kinds of activity at the global level. So FATF issued certain recommendation that serve as anti-money laundering, okay, and combating the financing of terrorism, and are known as the FATF Standards 2012. Now, money laundering and terrorism financing are considered as criminal activities across the world. It's not like only RBI is facing all these kind of things. It's not like only India's financial institutions are involved in the money laundering or terrorist financing. Every country is facing this. And to resolve this problem from the banking system, from the financial system, FATF is also working. It is also providing you the measures, AML guidelines or the CFT guidelines it is providing you, so that these issues can be removed. Okay. Now, the stages of money laundering. We have three stages: placement, layering, and integration. So I have already discussed this. In the placement stage, funds from the criminal activities are introduced in the financial system. It means this is the first step where you are entering your black money into the legal financial system. That's the placement. Okay. And this will be done through the deposits in multiple bank accounts. How you will enter that illegal money into the legal financial system? By depositing that money into the multiple bank accounts. Now we have a next step, that is layering. Now you have to create a complex network of transaction of your money. So next, those funds are passed through numerous financial transactions in these accounts, creating several layers of fund transfer. This helps in hiding the source of the fund. So what you are doing? You are making that money to go through from numerous financial transactions. You are creating a several layers of fund transfer from A account to B, B to C, C to D, D to E, E to F. Different accounts are there, and you are transferring that from multiple accounts, so that a layer of transaction will be created, and it becomes a little hard to find out from which particular account this fund has been first circulated. Or you can create a number of transactions by investing in the different market as well. So first of all, it's very important in the layering stage, you create a complex network of transaction. A complex network of transaction, so that your money will not be easily find out. Okay. Now third, we have an integration. Next step is collecting the fund lying in multiple accounts in one or few accounts that are then deployed for investing in some legal business activity or acquiring some assets in legitimate manner. Now in the integration, I will be purchasing my house, I will be starting my business, I will be, let's say, purchasing some luxurious cars. So this is how I am creating my personal asset. Now if someone will ask from where you have purchased this luxurious car, I can simply say that I have invested in the mutual fund, I have got the return and I invested the money there. Okay, so these are the three stages by which money laundering can be done. Okay, now the objective of prevention of money laundering is, the main objective of measure to prevent the money laundering, first we have to prevent criminal elements from using the financial system. for the money laundering purpose as well as for terrorist financing. We do not want the banks, the financial system should be involved here. So we want to remove them. Now, to prevent the spread of criminal activities in society, if you do not stop one person who is doing money laundering or terrorist financing, it will spread more. More people will be involved here, because they will have such kind of confidence that this person also have done, he have been not caught. So it's easy, we can also do that. Now, to safeguard the economy from the financial crimes, from the cyber crime, from the financial crimes, we want to save the economy, we want to save our customers as well. Now, to prevent the terrorists from gaining access to financial resources, and we do not want the terrorists will get the access to our financial system. So the main and big objective is that we do not want the financial system to be involved in any kind of criminal activities. Okay. Now, the stages of financing of terrorism, we have 4 stages here. Do remember, money laundering had 3 stages and the financing of terrorism have 4 steps. So there are a lot of terrorist organizations in the world. They have financial cycles similar to commercial entities, and they use the banks and financial institutions to perform them. So the first stage is raising. Raising is nothing, simply raising the source of fund is the first step. From where you can earn this money. You can earn this money from the persons who have sympathizers of yours. Let's say you have created a certain story like this happened to us, that happened to us, and that's what we have faced in our past, and that's what we are going through. And there are some people who feel, who being emotional to your situation, they started helping you out with the funds. And that's what the first step is, raising the capital. From where? From your sympathizers. Okay, you are raising the capital. Apart from that, they can also be engaged in the income generating activities. It can be a legal or criminal activity. Maybe like in a lot of movie, we have seen that the terrorists are living in the country and doing a normal job like us. They are earning that money. So they can earn the legal source of income by working also. So that's what we are doing in the raising stage. You are collecting the capital, you are raising the fund that will be required for the terrorism activity. Second, after raising, you have to move that money. So it's not like you are earning money from India or you are earning money from XYZ country, and in the same country you have to use that money. Obviously not. In the terrorist activity, maybe you belongs to the other country and you want to do something negative to the another country or whatever you are planning of. So you have to move that money from one place to another, because anywhere this money can be utilized, and the persons who are related to the terrorist organization, they are living anywhere in the country. So contributor to the terrorist organization can be located anywhere, not in the home country, but across the world. So what you have to do from there, you have to take that money in that particular area or that particular city or that particular country where you want to perform your transaction. That's what the terrorist organization is doing. So first you have raised your money from the sources, then you move that money from one place to another wherever you wanted it, and the third one is storing. After moving that money, the third thing, you have to store it. So it's not like after collecting the money from the raising stage, you will be immediately using it. Might be you will use it after 1 year, after 6 months, after 3 months. So till then you have to store that money, and to store that money, the people are having a bank account. So the fund has been raised. It may be deployed for the terrorism related activity, including the regular activities for running the outfit. With the gap of time, you have a gap. It's not like you need a immediate money and you have immediately used that money. So that gap of time, you have to store that money, and for this purpose also they are using what? They are using the bank accounts. Okay. Now, the last stage and the fourth stage, we have a using. After that, you have a money in your bank account, and whatever purpose you were collecting that money, when the time comes, you use that fund by withdrawing the money from the bank account, and you put that money in the terrorism activity. That's what using is. So the raised funds are used for the purpose of carrying out the terrorism act or for various organization related activity. So what we have done, first we have raised fund. Second, we have moved that fund from one to another place. Third, we have stored that fund. And fourth, we have used that fund. These are the 4 stages that has been seen in the terrorism financing. Okay, and this stages is important. You have to know them. Now, what are the measures to mitigate the money laundering risk? And now, first, you have to understand the customer and their financial dealing better. Now, why we are saying it's important to know your customer? Because if you know your customer, you will be easily able to find out their purchasing behavior, their transaction behavior, wherever they are spending money. You will be able to find out what behavior the customer is having. Okay, so it is very important. Then second, to detect and report the suspicious activity to the FIU IND as per the let down procedure. So Financial Intelligence Unit India is there, and the principal officer of a bank have a responsibility. If you have any kind of suspicious on a particular account of your customer, then you have to inform that within 7 days to the FIU IND, so that the proper monitoring of that account have been done. Okay, now to compile with applicable law and regulatory guidelines. To adequately train the staff in the KYC and AML process, you have to properly give the training and a certain time period to your staff, so that they will know how to compile with the KYC AML guidelines. So these make it difficult for the criminals to abuse the bank for the money laundering and financing of terrorism, as their activities are closely monitored. Hana, people are closely monitored here. That's why they will be somehow having a kind of fear, I will be getting caught if I am doing these transactions by using the banks. So they mitigate money laundering and financing of terrorism risk, as criminal would avoid vigilance bank. So those banks who are having a proper monitoring in your account, they are cross-checking your transaction and everything. In that situation, now you will think twice before using the financial system or the banking system to perform your money laundering or the financing of terrorism. Clear? So this was the basic of your AML KYC guidelines chapter that we have discussed. Now we are going to perform a certain practice on a certain question. So let's start. The first question is, objective of KYC is R. Why you are having a KYC? Achha, answer is already visible. Chalo, koi nahi. So first question is asking, which of the following is the objective of KYC? You can see, to ensure appropriate customer identification, you should know your customer. To monitor transaction of suspicious nature, then to ensure that the customer would not deceive the bank, to ensure if loan is given, it would not become a NPA, and the last one we have here, that only A and B. Okay, so it's not like KYC was done to control the NPA situation. No, it is not true. So right answer cannot be D. Okay, apart from that, if we are talking about customer will not deceive the bank, this is also not the part of the KYC. KYC is simply a know your customer procedure, which should be performed by each bank and financial institution to know their customer. And what does it mean to know their customer? So that you can have a proper customer identification, the credit history, the credit worthiness of the customer, the fraud default if the customer had something, and any kind of suspicious nature of transaction if the customer is doing. To know these activity, you have to have a KYC. That's why right answer will be only A and B. Okay, so that's the objective of KYC. Only A and B will be correct. Now, next question we have, which of the following is not the stage of financing of terrorism? Not a stage of financing of terrorism, and there are 4 stages in front of you. So we know money laundering have 3 stages, financing of terrorism have 4 stages, right? So which of the following is not a stage of financing of terrorism? Raising, moving, storing and allocating. So first we have discussed, you have to raise the money, then you have to move money from one to another location, then you have to store money, and the fourth, you have to use that money. So it's very obvious, allocating is not your stage of financing of terrorism. So right answer will be your D option. Okay, right answer is D. Now next question we have, consider the following statement regarding objective of measures. Hana, consider the following statement regarding objective of measures here for prevention of money laundering are. What are the particular stages what are the particular statements are there which are the objective of measures of prevention of money laundering act, है ना, and you have to find out which of the following is incorrect one. So these are the statement in front of you. Okay, let me know the answer. So first is saying here that to prevent criminal elements from using the financial system for money laundering activity. Second is saying to spread of criminal activities in society, to safeguard the economy from financial crimes, to prevent terrorists from gaining access to financial resources. So out of these, which of the following statement is incorrect? है ना, about objective of measures for prevention of money laundering. So which of the following is correct? Okay. So if we are talking about this question, we have to find out the statement that will tell us that which of the following a statement regarding the objective of measure of prevention of money laundering are objectives. So why we are doing to prevent criminal elements from using the financial system for money laundering activity? This is true. To spread of criminal activities, to spread of criminal activities in the society. No, we do not want to spread the criminal activities. To safeguard the economy from financial crimes, this is true, we want to safeguard the economy. To prevent terrorists from gaining access to financial resources, this is also true, but we do not want this. We do not want to spread the criminal activities in the society. So the second one is not the objective. So right answer will be your B option. Okay, right answer we have is your B option. Now next, which of the following is not the stage of money laundering? So money laundering have 3 stages. Out of those 3 stages, which of the following is not one of them? So we have discussed, first you place the money in the, you enter the money into the legal financial system, that is placement. Second, you create a complex of network transaction, layering. Third, you create your personal assets. So right answer will be raising. Raising is not a stage of money laundering, it's a stage of financing of terrorism. Now next we have customers are typically categorized in dash risk categories. How many categories are there? There are 3 categories: low risk, medium risk and high risk. Okay, so right answer will be your B option. 3 risk categories are there: low, medium and high. Clear? So this was all for today, in which we have discussed in detail what is AML KYC norms required for to control money laundering, to control financing of terrorism, and we have practiced the certain questions. Now if you have any doubt in the particular session, do let me know. Also, if you are watching recording of the session now, you can ask your doubt in the comment section. Now if you want to cover, this is the basics of AML KYC guidelines we have discussed. Now you have to study the norms. In the KYC, what are the norms? In the AML, what are the norms that we have to study? For that, if you want a in-detail study, first of all, you have to download the Adda 24/7 application. After downloading the application, you will find the exam category, that will be your JAIIB, CIB on the application. So go to the JAIIB, CIB category of paper, and then you will find here the May 2024 paper of your JAIIB. So go to the category, go to the JAIIB May 2024, you will find all the batches are available. So I have started the PPB subject from 20th of November. From 20th of November, I am taking regular PPB sessions. So if you want to enroll, you have an individual batch of PPB. Okay, IEIFS is starting from 8th of December, and there is a comprehensive batch. Apart from that, we also have a JAIIB Mahapacks 2.0 available. Now, if I am talking about JAIIB Mahapacks 2.0, it have a benefit like once you have enrolled in the Mahapacks 2.0, you will be getting all the batches on the Adda 24/7 application. All the upcoming batches will be added here, and it will be available in the double validity. So first of all, how to enroll? Do check the offerings of the product, do check the validity you want to enroll. Click on the buy now option, and to enter the code, you can enter the code here Y496 and click on the apply. When you apply, you will find 80% discount is available here, and you will get 1% additional discount by using the Adda 24/7 application. Okay, by using Adda 24/7 application, you will get 1% additional discount on this price. So there are coins available. Used as coins, you will get 1% additional discount on this amount. And the validity will be 1 year. In Sankalp batch, you will get the validity of 9 months. Here you will get 1 year. In Sankalp batch, you will get the regular live conceptual classes, ebooks, topic-wise mock test, full-length mock test, and 24/7 recording will be available. But in JAIIB Mahapack, you will get all the future upcoming batches also enrolled. Okay, so this is how you can enroll. So first, download the 24/7 application. Okay, that will be helping you out to get the additional discount. So this is all for today. Now, if you have any doubt, you can ask your doubts here. And last but not the least, do not forget to subscribe to the channel Offices Adda 24/7 and press the bell icon so that all the upcoming sessions notification will be given to you. As well as 7:30 AM, we are having a regular IE/IFS sessions for English medium candidates. So do not forget to join both the session at 7 and 7:30 AM for PPB and IE/IFS respectively. Okay. So thank you everyone for joining the session and have a great day.